Ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm going to kickstart your Forex trading day by taking a technical look at three of the major currency pairs. Let's get started. I'm going to start by taking a look at the Euro versus US dollar. Let me put this on the hourly chart first. What we had in what we've seen today in the price action is a sharp move to the downside. The ECB raised rates by 25 basis points. It was a 50-50 chance of whether they tighten by 25 basis points or not, although there was a hint yesterday that they were moving in that direction. And indeed, they did raise rates by 25 basis points. The initial reaction was to the upside, and then we saw the price rotate back to the downside and sell off. That was also helped by stronger PPI and retail sales data out of the U.S. So technically speaking, we did move below the low price from last week of 1.06854 and move to a low price for the day at 1.06546. If I go to the 4-hour chart and look at these lows through here, the price moved below those levels, but as you can see, we are back above these levels through here, these swing levels through here. It's formed a bottom. We did have an extreme here, but then based higher and moved higher through here. So we moved below that area between the 1.0660, 1.06669, but only by a little bit, and moved back above that level. Now we're trading in between the low price from last week at 1.06854 and this swing area down to 1.0660. Currently trading at 1.0674 or 75 as I speak. Taking a look at the daily chart, that moved to the downside. We'll next target the end of May low, which came in at 1.0635. If we can get below that 60 level again and stay below that level, below that, and then we'll start to look toward the 38.2% retracement of the move up from this low to this high right here. That level comes in at 1.0610. So those are our next key targets on the downside. Move below that and opens the door for further selling in the euro versus US dollar. But once again, going back to our 1-hour chart here, the key level to I right now is the low price from last week at 1.06854. If we get below that level, get below the 1.0660 level, we start to talk about lower levels here. Also, we are moving away from the 100 and 200-hour moving averages. The last few trading days, the price has traded above and below those moving averages, but the move to the downside has now increased the bearish bias. So the sellers are in control in this currency pair. We'll see if they can keep control by initially staying below the 1.06854 level in that pair. Let's take a look at the sterling versus US dollar. I have it on the 4-hour chart. And as we saw yesterday, the price came down and tested the 200-day moving average. That's a green overlay line here on the 4-hour chart. That level currently comes in at 1.2432, and we bounced off of that level, moved higher. We consolidated in the Asian session and then started to move lower in the early New York session, breaking below that 200-day moving average with the selling in the euro. The price fell below the 200-day moving average of 1.24320, but as you can see, is back above that level. So trying to hold above the 200-day moving average after the failed break below. Perhaps we will see. Let's take a look at the hourly chart just to look closer at that. At the price action around that 200-day moving average, and you can see how the price fell below it in the last hour. Well, it's helped by the euro, ECB moving, and the euro moving lower, also the stronger US data. But we're back above that level. We'll see if we can stay above the 200-day moving average. That would give short-term buyers some hope. If we go back below the 200-day moving average, however, all bets are off. Look for lower levels in this pair. By the way, the last time the price traded below the 200-day moving average for the sterling versus US dollar was back here, back in March 9th to be exact, 2023. So it's been a long time that the price has traded below the 200-day moving average. So key level for us traders. Also watch on the top side the 124.72 level. If we can't get below the 200-day moving average again, a move back above the 50% retracement level, 124.72 level. Could see Kickstart a move back to the upside for this pair on the disappointment of the failed break. Finally, let's take a look at the dollar versus yen. And if we look at this currency pair, the price has been wandering above and below the 100 and 200-hour moving averages, 100-hour moving average earlier this week and yesterday. Yesterday we held the 200-hour moving average in trading. Today those two moving averages converged, and the price did move below both of them during the Asian session, but then we started to find support in the European session against the higher 200-hour moving average at 147.123, and the price is above that level. As you can see, these two moving averages will now be support for the pair as long as the price can remain above the 200 and 100-hour moving averages down to 147.058. The buyers remain more in control. If it were to move below those levels, then the bias would shift more to the downside for this currency pair. So there you have a look at some of the major currency pairs as we kickstart your trading day in the Forex market. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.